Welcome to the Dave Palma Show, the podcast that revives, restores, and awakens your innermost capabilities.
You have the training and the talent to succeed, but do you have the guts to fail?
I love what I do. When you love what you do, you want to be the best at it.
Today is about the power of you. You will change the world.
Find your path to success through the journey of those who have succeeded. And now, your host, Dave Palma.
This is a video.
Oops. Hi, welcome to the Dave Palma Show. And with me in this episode, I have someone who's a financial advisor and a chartered financial consultant, as well as an accredited investment fiduciary who founded Opta Financial. He helps clients examine their current financial situations, financial goals, completes a financial analysis, provides recommendations, implements and reviews plans for clients. In addition to his financial services industry, he also used to be a former law enforcement officer. Freddie Rappina, welcome to the Dave Palma Show.
Thank you for having me.
Oh, that's a pleasure to have you as well, Freddie. And I used to be a former emergency service person. I was a former firefighter myself, so helping people through coaching as well, more all round, from personal training to wellness to doing some life coaching and stuff like that. But obviously doing this podcast is become quite popular, if you could say during a pandemic. So I was quite busy during it.
Well, I could say you've been around too, so that's good.
Yeah, definitely. So you're a former cop and now have your own business in the financial advisor industry. Mm-hmm. I know, actually, I've had a pilot on the show who also did a similar thing. And he made quite a lot of money from both jobs, actually. He was doing both at the same time, actually. And then he made a lot of money because he was giving a lot of tax advisors and things like that, financial advice to fellow pilots who had the money, So, but what is it exactly that you do? And the question really I'd like to ask is, what financial solutions could you give people for various unique situations, especially with what's gone on in the world, in the past couple of years, and also with the current global economic situation?
Well, I think we're obviously now in a recession. We've had a boom, and these are just cycles that continuously go on, for various factors. But people I think don't focus on enough is cash flow. Okay? Everybody likes to talk about investments. Everybody, what's going on in the market? What do you think the market's going to do? And the market's great. Market's a great tool. But have you talked to anybody over the past 10 years that just made a boatload of money in the market? Now they can retire and live the life they've always dreamed about. Probably not, but you may know somebody. The market really just doesn't create the wealth that people think it does when it comes to personal finances, right?
Right. Okay.
People don't focus enough on cash flow, right? How that cash flow is what you use to improve your lifestyle. Cash flow is what you use to pay for all your kids' activities, all your bills. It's not your investments. Okay, so people that's one thing that I think separates our firms from a lot of other firms, because we don't just solely focus in on getting the best return on this mutual fund or that mutual fund. It's more about how do we increase the cash flow, and that's, I think, also separates the middle class from from the rich or the wealthy, however you want to say it, right? Because the middle class focuses on saving, right, and saving great, but they don't take that next step to create the cash flow, whereas the wealthy do. So they have their assets and then they'll leverage their assets. And typically that will include purchasing real estate or purchasing businesses. Businesses that create cash flow, real estate that creates cash flow. And it's that cash flow that they use to improve their lifestyle. And I think that's why a lot of people spin their wheels, because they get that first part real well. They constantly working, so most people have, W-2 income, which gets taxed very heavily in a lot of cases. So they need to be able to take that savings and then be able to create cash flow with it. So I think that's the biggest difference between, why is the rich keep on getting richer and everybody else not, kind of staying running on a treadmill. So I compare it to checkers and chess, right? Checkers is, what people have been taught about personal finances, and it's been kind of just slammed down their throats over the better part of their lives, and that's what they think is, the right thing to do. And chess is what the wealthy have been taught, and what the wealthy teach their kids, and how that continues to just get bigger and bigger. So, but the problem is there's a lot of checker financial advisor out there, and there's nothing wrong with checkers. You can play checkers. If you're going to play checkers, be a good checkers player. There's nothing worse than being a bad checkers player.
Right. So you're talking about checkers and not chess. You're not talking about chess. You're talking about checkers.
Right. If you're going to play checkers, be a good checkers player. Just don't think you're playing chess, and don't think you're able to achieve the amount of wealth that a chess player is able to achieve, because you're just not playing the same game at all.
Right. Okay. That's quite a good analogy that you've given there. I did see that at the beginning of the bio, which will go on the this podcast for the listeners and audience to see. So it's quite interesting. So you could elaborate more on that checkers analogy, and also tell us more about how we can get into this cash flow and how you can create this cash flow. Because it's one thing saving money, and a lot of people will want to try and save money. In the UK, over here in the UK, they're saying that there's probably going to be a recession at the end of the year in the UK, and the Bank of England have put the interest rates up in the hope that people will not spend money, but i.e. taking out loans and mortgages for their houses, and in fact it will encourage them to save money. So it's interesting you say saving money. It's what you do with your savings in terms of turning that into cash flow. So perhaps you could elaborate on that, and also the checkers and chess analogy.
Yeah, sure. It's in my opinion, the biggest differentiator between are you a checkers player and are you a chess player is your attitude towards debt. All right. Yeah. If you are a hardcore checkers player, you don't want to be in any debt, right? And when we talk about debt, we're not talking about like credit card debt, right? That's always bad debt. We're talking about leverage. So if you're a checkers player, you want to not be in debt. And if you're a chess player, it's kind of trying to get into as much debt as possible. But that debt is income producing debt, not being a slave to a lender, right? It is being a partner with a bank or a financial institution. Right. Yeah. And the other thing is taxes. What's your attitude towards taxes? I mean, it's a huge expense for, I don't care where you live. Yeah. So, and being able to reduce taxes, but the governments, they have tax codes. They're basically rules that get people to do what they want them to do, right? Basically getting them to invest in real estate or invest in businesses. Businesses get a ton of tax breaks. Business owners get a lot of tax breaks because they can create jobs, right? Yeah. And United States W-2 income jobs, which creates more tax revenue for the government. So they give the business owner the tax break. Yeah. So the business owner can create more jobs and create more people that are creating the income that the government takes a big chunk out of. So it's to the benefit to give the government's benefit to give the tax benefits to the business owner. It's also real estate investors like myself. We get a lot of tax benefits because the government wants us to purchase real estate, especially rental real estate, because we kind of compete with each other when we keep the rent low. We create competition amongst each other to keep the rent low.
That can't be good for real estate owners if the rent's low. Is the idea is for you to make money through as much rent as possible, not as low rent as possible.
Well, it helps the government because they don't have to deal with housing, right? They don't have to we do it for them by them giving us tax breaks. We lower it. We keep the rent. We rent the low.
Yeah,
so they don't have as much government housing.
Yeah.
So it's a series of incentives. And when people ask me, I want to read a book on investing. What book should I read on investing? I tell them, don't read a book on investments. Read a book on taxes. Taxes is where a lot of the wealth lies, right? It's not, and especially not paying them. Now, tax avoidance is good and legal, so that's fine. Tax evasion is bad and illegal.
So tax avoidance, I know there's tax evasion and then there's a tax avoidance. There's two different things. So
so tax avoidance is here, government, this is what I did with the money, and because of the rules that you wrote, you can't touch it. Neither. That's tax avoidance.
Like loopholes.
Well, not loopholes. In my opinion, that's an overused word. They're not loopholes. They're just rules. They're just rules. They're like handed to you. It's like, here are the rules, and they're like, oh, that's a loophole. It's like, no, it's not obscure. It's just the rule. And tax evasion is, what money? I didn't make any money. Meanwhile, you're like driving a Ferrari. So that's tax evasion.
I was going to go into, I don't want to get into politics. I've got a degree in politics, but obviously with Donald Trump's situation, but I'm sure there's a lot of people out there. There was, what's his name? McCarthy. He committed suicide in the end. And he was a real renegade towards why he shouldn't pay taxes. But that's real kind of tax avoidance, blatant tax avoidance.
Tax avoidance is fine, but it's
tax evasion,
Right.
He just said
tax avoidance is really good. It's very easy it's really easy when you're a chess player. When you're a checkers player, tax avoidance is very difficult because there's just not a lot of places to go. It's not a lot of, it's not a lot of alleys. It's not a lot of, hallways. It's just like you're in just the room, right?
I say,
so when you're a chess player, because again, chess players are doing what governments kind of want them to do so they get the tax breaks. There's just all kinds of different ways to go.
I suppose a way to look at it is it's easier to get cornered in checkers, and there's very simple rules. There's not so many rules where you can think, oh, well, actually, I can do it. There's so many pieces that have got different moves and stuff like that. And you can use those moves to your advantage, whereas in checkers you don't have as much. Every single piece is the same move. It's either diagonal or straight, and you can get cornered much more easier, into debt or whatever than with chess until you do get
especially taxes
or checkmate. Exactly.
Especially with taxes, there's not a lot of moves in checkers at all. But for some people, they should be playing checkers, right? I'm not saying checkers is bad. I want to make that very clear. I'm just making the distinction. It's not chess. So if you're playing checkers, just
play checkers.
Please don't complain.
That
you're the rich keep getting richer because you're not playing their game. You're not playing.
I know.
A totally different game.
It can be a very, very big kind of. It's a lot to learn. A lot of paperwork. A lot of accountants. I think yourself, you're an accountant or got some certified accountancy.
I'm not an accountant. I'm a financial advisor.
Financial advisor. Okay.
But one of the things I pride myself on is knowing a lot about taxes.
So tax law, basically.
Yes, taxes. Tax planning is huge, and that's different than doing taxes. Doing taxes, That's what a EA or CPA does. That's doing taxes.
That's
tax planning is what you're doing. Tax planning is all the things you do so you don't have to pay the big tax bill at the end.
So, for example, in the UK, you only need to be in the UK for 3 months out of every year. A billionaire could just live in a little island like Richard Branson does. 9 months of that, 3 months, and don't pay any tax at all out of that billion, whatever he's making from his airline or whatever,
Yeah, because what is he on? He's on Necker Island or wherever he is.
Yeah, exactly. That's nice.
Yeah.
That's a nice financial planning he's done there, isn't it? So,
Well, what did Richard Branson? Definitely one of my heroes. Definitely, read all his books, and well, what did he do? He started with the student newspaper and a telephone booth, and eventually built all kinds of businesses out of that. And,
I think quite a few of them aren't existing. Of the ones that are existing, I think he's kind of like made into other people have bought them or something, but still kept the Virgin name. I can't remember how he did it, but
yeah, I'm sure whatever he's doing, he's doing.
Yeah, he's doing well. He's doing well. Yeah.
But it's really about that's a chess player, right? That's not someone who worked at a 9-to-5 job and saved every penny they ever made and is hoping for compound interest over 30, 40 years to be able to generate enough income from the account to be able to sustain a retirement.
Yeah,
that's checkers, right?
Yeah.
So and that's not the game that Richard Branson and a lot of other entrepreneurs play. Now, you don't have to be as big as Richard Branson to be successful.
No,
right?
absolutely not. No. I mean, because the tax bracket here, I mean, it jumps from 20% to 40 or even 50%, in not so much of a higher earning. I mean, I could go to that 50%, if I've got 2 or 3 jobs, earning a similar, money.
Well, I'm sure it's the same as here in the United States, but those 2 or 3 jobs are what we call W-2. It's just highly taxed income because it's earned income. It's taxed very heavily. Whereas if you have business expenses or you create passive income by having rental real estate, then usually the taxes are less in most countries.
Right, that's quite interesting. Yeah, that's quite interesting. Okay, all right. So we've kind of got the clarification there on what the actual checkers and chess analogy is, and really focus on tax. So what about the cash flow then? How can people get to be like the riches rather than being, like the 9-to-5 worker, and to get that cash flow situation and not just simply put it in a savings and hope, keep the fingers crossed that,
well, that's the bridge, right? That's the bridge between the 2 games. And in my opinion, it's more about how do you leverage the assets. Okay, so you have the assets, right? So I'm not saying don't invest in this, the market or stocks, bonds, mutual funds, all that good stuff. Do that, right? You could do that, but then once you have it, a percentage of that could be leverage, right? Take out a loan versus with that as your collateral to purchase a cash flowing asset. That is the bridge, right? So you have, let's say you had, I don't know, $500,000 or $1 million in paper assets, right? Your accounts. What are you comfortable leveraging? I'm comfortable leveraging 20%. All right. So you're taking, so we're able to leverage $200,000 to purchase a $200,000 piece of real estate. And that creates X amount of cash flow. And it's that cash flow that you put in your pocket. That's what you use to enjoy your life. So you don't have to sell the assets.
No,
right? You don't sell that account. You don't sell anything in the account. The account just keeps on growing. And it keeps growing, it keeps growing, it keeps growing, it keeps growing. So and then you use the cash flow for your expenses and your lifestyle. And you do that, it's all about scale, right? So some people may have smaller accounts than others, but it's still the same game. What are you willing to leverage? Obviously, people like Richard Branson have a bigger bigger amount of leverage.
I'm sure he's also making a lot from his real estate as well. Anyway, if he owns the whole of Necker Island and rents it out as a hotel and stuff like that to all these celebrity friends out there, so
creates cash flow, right?
Cash flow, yeah, definitely.
My thing, he doesn't need to rent it out, right? Just
probably doesn't. No,
creates cash flow. I don't know what the the tax benefits are for that that property there, but I'm sure there's something.
Yeah, it depends where he's registered tax, but I think he's UK registered, so probably he's still not paying taxes because he's allowed not to, because he's not in the country. Do you see what I mean? So that's how it works.
Yeah, I don't know the specifics.
Yeah, but I think America has a different thing, because you got this kind of, you don't have a double treaty thing, whereas you can be, you have to still remain a tax resident in the US, even if you're a resident in another country. Whereas in the UK, if you're a resident in the UK or another country, you can, pay, you can sign that treaty with that country. I'm getting confused now. I'm confusing you, but US doesn't. You end up paying taxes in two countries, which makes it really expensive. Taxes.
Well, in the United States, they set the rules for people to become wealthy. It's just it's great but you have to have the mindset, right? The mindset's got to change from the checkers to chess, or just be a good checkers player. Now, you can live a nice, comfortable life. You can retire playing checkers. You can do all that.
Yeah.
Like I said, you just can't. You're not able to obtain the wealth. That a lot of chess players are able to obtain. You go down. My joke. I live in the Tampa Bay area here in Florida, and I joke when I'm doing talks, and I say, go down to the boat show here in Tampa Bay, and you walk up to somebody and say, "Hey, man, how'd you afford this? $25 million boat?" He's not going to say, "Oh, I killed it in my IRA." It's not going to be his response.
Some people buy the boat as a tax write-off as well. It's like, right, okay, what can I buy to just tell the tax man if they can prove that they needed the boat, as a business. So,
well, for here in the United States, the prongs are, it has to be ordinary and necessary for your business. So whatever ordinary and necessary is for your business, that's the standard. I guess that's open to a lot of interpretation.
Yeah, exactly.
And I definitely recommend people that kind of stay very close to
ordinary
the guardrails on that. Don't stray too off from that. But that's it. Just ordinary, necessary, and it's a business expense. So but a lot of people don't have businesses. They're employees, W-2, and they get hit pretty hard with taxes.
Yeah, that's the thing. Yeah, that's quite interesting. So also, obviously before we go, you also used to be a police officer. As I said, I was a former firefighter, so very similar, frontline, first responding. So how long was you at that for then?
Well, it was 20 years. 20 years
okay.
With Fairfax County, Virginia. So
was you already in the financial? Was you already in the financial kind of?
I started. I like your friend there. I had 2 careers there for about 6-7 years.
Okay.
And my financial planning office was right next to my police station. I would literally run across the street sometimes after
don't worry, lots of firefighters, I'm sure it's in the same in the States, lots of firefighters have a little second or even third job, part-time running around sometimes. I did the same thing, so
once I really started learning and understanding it, I wanted to start educating people. I got my licenses and all that. Really wanted to help other police officers, other firefighters, surely at first, and we still do that, but now we're kind of expanding a little bit, helping everybody. But it's really getting people to understand those two games and how to play both of them well, and understanding who you are, right? Because not everybody's going to be a chess player, and that's fine. If you're going to play checkers, play it well. But that's, in my opinion, that's definitely one of the biggest issues that people have with personal finances here in the United States, because they save and save and save, and they never see their lifestyle improve. And we try to help them improve the lifestyle.
Yeah. So it's all about the cash flow, basically. So if you can. What do you think of Rich Dad Poor Dad? Because that's all about cash flow. Is that a good book for people to read? I know you said don't read the book.
Oh, read the book. I mean, it's Robert Kiyosaki is, he's kind of like, I don't know,
a big guru, a big
godfather
guru in
of
it.
cash
Yeah,
flow.
yeah.
So
A
it's
big name.
yeah,
Yeah,
it really opened up a lot of eyes to those differences, and and he's a big real estate proponent as well.
yeah.
But yeah, it's a great book. Yeah, there's a lot of them though. I read the books that I tend to agree with. I also read the books that I tend not to agree with, just to make sure that I'm always challenging myself and my beliefs,
Yeah.
my thinking.
Checks and balancing.
Yeah.
What's
So,
being said. Yeah.
but yeah, just creating cash flow, in my opinion, is extremely important. But how to do it correctly, right? Not just and it's really hard in my opinion, hard to skip a step, right? So so if you are, in a mountain of credit card debt, it's not, oh, we're going to play chess right now. It's like, whoa, 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 we got to probably have to play checkers for a little while and get ourselves ready to go,
Yeah.
and then build a bridge over the chess if you want to. So it's just a little bit. It's a little bit different way of thinking about it.
Yeah. Oh wow. Well, I mean, as I said, you can hear that I'll probably know a little bit, of what's been what's out there already, but it's quite interesting to hear it from someone from a similar background, emergency services, and gone into the world of doing that. It's quite a challenge at the moment for a lot of people. With what's going on, people probably lost a lot of businesses through the lockdown, and especially in like the fitness industry, the gyms went, to restaurants and travel and things like that. So, what would you give in terms of now things have kind of gone back to normal there? But obviously, because of the war in the Ukraine, now they're saying that's now caused another, with the oil prices gone up and the cost of living. What would you say with all that?
I would say there's always going to be something. There's there's always going to be something, that's causing some economic impact somewhere. Obviously the pandemic was a big problem. But the people that were able to weather the storm were the people that had enough cash flow, enough investments, enough protection to weather it. Whereas the people that didn't have, businesses that didn't have a whole lot of reserves and couldn't make it through just a few months, that became an issue real fast. So, hopefully some people have realized that, hey, I can do something different, right? Because there's going to be something next. There's always going to be another storm around the corner. And how are you going to be able to weather the storm? And so that's one of the things we help with. It's just, hey, you have a business, that's great. What happens if you have disruption in your business too? That's another thing. It doesn't have to be a pandemic. It could be a new app that just just kind of replaces a lot of your business. So
exactly.
Like I said, having real estate, having investments in other businesses, owning other businesses, a lot of passive income. Those are things that typically get through storms.
Yeah. I suppose someone like Elon Musk has got his fingers in a few pies of it. He's also a little tiny bit renegade as well, a bit like McCarthy, but not as much. But obviously got almost got his fingers burnt a bit with the Twitter contracts thing. I think he's still going on, isn't it? Really, but
I can't speak to any of that, but I've used PayPal in the past few days, and so I mean, I watched a rocket go to space.
He's still the world's richest man, So I don't think he's really going to worry about a lot of things. So. Okay, all right. Well, Freddie, it's really been a great pleasure having a conversation around this because, my thing is that, as I say, with everything I do, finance is also part of that equation of people's life and well-being, and everything. The financial well-being side has to be slotted in, as we have seen, during these difficult times for most people that are, not done so well during it, really. So, just like to say, thanks a lot for coming on my show and talking to my audience today.
Oh, you're welcome. Thank you for having me. It's great.
Cheers. Thanks a lot again.
Have a good day.
That's all for this episode. Thanks for listening, and remember, if you want to support what we do, then share, subscribe, and leave a review over on Apple Podcasts, or head over to my website, davepalmer.com, and click on Rate Show. Well, that's all for now, but I'll see you in the next episode of The Dave Palmer Show.
Follow us on Facebook, Twitter, and Instagram.